So, budget 2026 is more of a back to basic and back to balancing. Back to basic because government has always endeavored to bring Indian economy to a nominal GDP growth rate of 10%. And this budget is emphasizing on 10% GDP growth rate. In fact, it is projecting 10% GDP growth rate for FY27. And back to balancing because the fiscal deficit target has been systematically brought down in last 2 years from 4.8% in FY25 to 4.4% in FY26 and now targeted to bring it down to 4.3% in FY27. And roadmap is very clearly chalked out for bringing down the fiscal deficit to a comfortable level of 3.5%. Now, while these statements, I think they make a lot of sense. How the macro statements are viewed by the global investors is very important. On one side, fiscal deficit suggests that I think the interest rates are going to be kept; it's not going to go up, and so would be the inflation, and so would be continued growth program for the economy. On the other side, I think the government has kept, I think, few agenda in place and at the same time borrowing program along with. They have put across, I think, the gross borrowing program at around 17.2 lakh crore, which means that I think they are basically more or less in line with, I think, the spending that they want to make through this borrowing program, not allowing the deficit to get affected. So, fine balancing act. On the other side, the debt to GDP, which is 56% today, is being targeted to brought down to 50% in 5 years from now. So, frankly, I think the global investor gets a message that here the country is basically on the growth path with the fiscal deficit discipline, which probably, in my viewpoint, is a classic way of I think looking at I think participation. And no wonder I think variety of investment scheme that the government has put across. Data center, for example, 22 years of tax holiday has been given, and that to those investors I think who set up the data center and before 22 years they want to exit. No tax ambiguity, 15% tax rate, and I think you are out. I think that is a clarity that the government has provided. I believe that this is a very powerful way of communicating to the global investors to bring investment to country. Data center capacity in the world is going to expand 5 times to 245 gigawatts from 45 gigawatts today. And if India gives this particular environment to people to come into the country and put across the data center tax free for 22 years, frankly, I think this is going to be attracting a significantly large amount of capital into the country. In my viewpoint, I think this is a perfect program. Along with that, the infrastructure related program also have been very systematically put across. Waterways, uh, the freight corridors, at the same time, I think the larger amount of thrust has been created on industrial corridors so that at least I think the higher amount of industrial activity takes place. And along with that, I think investment going into the container programs, investment going into education programs, skilling programs, and so on and so forth. So government has, I think, very systematically looked at each and every programs, and they have not moved away from their consistency as far as I think priorities are concerned. In my viewpoint, I think these particular priorities are extremely important. So from economic point of view and looking at India from outside, I think this is a fantastic program that they have set put across. Market is slightly disappointed. Why market is disappointed? I think that is also required to be addressed. Market is disappointed because I think STT rate on futures and options have gone up. On futures, the STT rates have gone up by 150%, and options, the STT rates have gone up by 50%. STT is security transaction tax. Now, market participants believe that I think if this kind of increase in the tax takes place, that means it will bring down the participation of players into futures and option. Frankly, I think one has to look at the data properly. Even if the government implements these higher STT rates, at the best they can collect in a year 15 to 17,000 crore through incremental STT on a market volume, against which today market has lost market capitalization of around 6.5 lakh to 7 lakh crores. It is justified. Is it justified? I think that's a question that should be asked. I don't think that it is justified. Why? Because STT increase on FNO transaction, not increasing on the cash market transaction, equity transaction. is a wonderful welcome to those traders who are using algorithm to use more cash market vis-a-vis the derivative market. That will on one side, I think, curb the excessive speculation which is hampering the economic growth in the country. On the other side, I think it will bring up the stock exchange's volume in the underlying equity market, which is fundamentally very important. And in my viewpoint, beautifully this particular subject has been addressed. However, market definitely wants to see more amount of trading activity, and they feel and they fear that FIs may not participate because of the higher amount of STT. In my viewpoint, it is not correct. In past six occasions, whenever they have increased the STT, FIs have actually participated more, and they have participated with a higher amount of volume as well. So, in my viewpoint, I think this fear probably is likely misplaced. Second fear the market is having is about the borrowing program of 17.2 lakh crore. Market believes that I think because of this borrowing program, I think the bond yield will spike up. If the bond yield spikes up, I think the bond prices will go down, and that will affect mark to market portfolio of public sector banks. And that is why we saw the sell off today in the market. In my viewpoint, I think again this is a very premature thinking process that bond yield will spike up. On the contrary, in my viewpoint, I think the government has set the borrowing program. It is an aggressive path that they put across. That does not mean that they'll be borrowing this particular amount of money. On the contrary, budget, as always it is, I think it's a clearance taken from the parliament, and that is where probably I think they've taken the maximum clearance of 17.2 lakh crore borrowing. Quite possible that I think by the end of the year they may not have borrowed that kind of money. So frankly, when it gets realized, at that time bond yield will get rationalized in my viewpoint. So knee-jerk reactions leave aside for a while. On the whole, the budget has delivered well for the economy. In my viewpoint, the valuations in the markets have become attractive enough. In fact, Nifty 50 on a forward earning basis has gone down below 20 times price earning ratio. Whenever in past, I think that 20 times price earning ratio mark is breached, at that point of time the buying has emerged, and that could be, I think, one of the reality that we will be experiencing. Fortunately, corporate fundamentals and economy, they are moving very well. Corporate growth, earning growth is, I think, definitely suggesting that we are in for a longer earning growth cycle in this country. So hopefully this correction in the market price is giving an opportunity to those who want to gradually build their portfolio into the market when the market is correcting. In the past, people bought in when I think the market was going high in the momentum. Today, the market is correcting, and that is a time that I think some of the seasoned investors they want to look at the market very favorably. In my viewpoint, to all my investors, I would only like to say fundamentals are absolutely in shape. Big companies are getting bigger. Correction in the stock price is becoming a buy opportunity, and that is where possibly I think you will build your portfolio, take our advices on how to build the portfolio, and we can move forward. I guess I think such kind of days, budget days, they normally offer a lot of volatility, but keep the volatility aside. In next 38 to 40 hours, I would think that the market would probably start stabilizing hereafter. Thank you so much. Have a wonderful time.